Hi, in this lesson, I want to expose you to some secret of technical analysis and indicator. Many a times, we use indicator in the wrong way, and it is important for you to know that as far as trading is concerned, indicator alone cannot suffice, which means trading solemnly depending on indicator 80% alone cannot suffice. What I'm trying to say in essence is you can trade indicator, but there are certain ways in which you can make the most profit using indicator. But it is far more easier to trade and more profitable to trade technically using price action alone compared to using indicator alone. And what I'm trying to share with you in this video is how you can either trade technical tools, price action, technical analysis alone using technical tools, or combine your indicators alongside with your technical analysis to have confluence. So indicators are meant to be an add-on. So don't build your trading system alone around indicator. But you can use indicator as confluence, use indicator as additional confirmation. So what I'm trying to say now is indicator can be used as a secondary analysis, but not as a primary analysis. So it is very important that you find a way to merge your price action alongside your indicator to find entry. So let's look at our chart. This is my chart. One of the way you can do this first, let's assume you are trading support and resistance, supply and demand. All these points I've marked, all these zones are zones of supply and zones of demand. So we have this zone 1, this zone 2, and this zone 3. Now let me add a technical tool. This zone alone, I can trade this zone without indicator. This is my H4 time frame. All I need to do, I will move to my 1 hour time frame. You can see that each time I've marked this zone before, price left this zone initially to the upside. So I'm expecting price to return to the zone for the second time. And look at it. Price returned to this zone for the second time and gave me this bullish engulfing candle. This is a technical way, technical tool, and a combination of price action. So I would have made my entry based on here at this engulfing candle. My stop loss is here and the rest is history. You can see how beautifully this plays out. These were trades that are faking in the previous day. Already, of course, we are in a new day. So these are trades of the previous day. Now, if we are to use indicators, how precise can we find this particular entry? So there are right way for us to use these indicators. Now, for instance, using my MACD. I'm going to use this MACD for two purposes. One, with this MACD, I can spot my divergence. Look at this. Price is making a lower low, a lower low, right? And here you can see the price is making a higher low and a higher low. So there is a divergence. And if you don't know what divergence is, you can watch our previous video on divergence. So this is a divergence. But now that I've spot this divergence, I will not go into the trade immediately. Now you can see the difference. In as much as indicators send me a signal, it is not enough reason for me to make my entry based on indicator alone. I will need my price action, because most of the time we focus on indicator saying it is an overbought and oversold zone. I made a video previously where I talked about there is nothing like overbought and oversold zone. For instance, if a car is speeding and the speed meter is reading 120 kilometer, will you say it is an overspeed, and because it is an overspeed, the car will reverse without applying brake? Or because it's an overspeed, the car will automatically stop speeding without slowing down and releasing accelerator? No. The same thing is applicable to price. The higher the speedometer, the higher the speed. The speed meter increase, the speed increase the same way the speed meter increase. So what the speed meter is reading is the speed of the car, right? So the same thing is applicable. The chart is the car. The indicator window you are seeing, being it RSI, MACD, stochastic oscillator, all those oscillators you are seeing are only reading the speed. So the speed will occur first before the oscillators or the window indicator will tell you what is happening. So most of them, they are lagging indicator. They are not a leading indicator. So when you see a leading indicator, where you see something okay like the Bollinger Band, stuffs like that. So all of these are lagging indicators. So they are reading what has already happened to you. So now it only shows us the strength. So how do we do this? We wait patiently. We now apply our technical tool. Pick your trend line and mark out this zone. Do you see? So we have this zone marked out peacefully. No? Yeah. Here is it. So we have our zone marked out. Then what do? We already know we have a divergence. So price will break this. Remember, this is a structural point, and here now we're having a break of structure. So price break through it, retest, and we are on our way to the upside. That is another way. Without any of this alone, because I've marked this zone as my area of demand, immediately I have this engulfing candle, which is a confirmation, I make my buy. If I need further entry, I will use this, a follow-up candle. So this is how you can use this. That you spot divergence alone, divergence did not play out immediately you see it. You need a confirmation. That is why you need a follow-up. You need a technical tool. We have established that, so let's take the journey further. Now, we have two indicators on this chart. The blue, which is the indicator below, is 50 exponential moving average, while the upper one is 25 exponential moving average. If you are to trade this, assuming you don't have any of these, the only thing on your chart is this. How do you trade this? Now you were told that whenever moving average crosses each other, you should buy. Now that is a wrong way to trade. Why? Because this is a lagging indicator. Before this buy or call, before this cross happens, can I tell you where price is? Price is at the top here. Let's put our cross here. Look at. Can you see that? Look at where this cross happened. This cross happened when price was here. So, and if you look at this zone, this is a resistant zone. Now, without a technical tool or marking area of supply and demand, you wouldn't have known that there is a resistance at this point. So that a cross happening here is not enough for you to buy. Because when this cross happens, price is already at this particular point. And it is even at a resistance point. So will you now be buying at a resistance when you are not certain that a resistance is supposed to be a point of reversal? And truly, we have this pullback of price. So many a times, you have this cross happen based on indicator, and then the next thing you jump in to buy. No, that is not how to go about it. Because before you see this cross, price has gone far from your indicator. So you need to be patient enough. And that is why you need to mark out your supply demand zone, support and resistance, so that you don't go and begin to buy close to a resistance, or you begin to sell close to a support or a demand zone. You wait for price to either break through it, then you make an entry based on a reset. So you can see now that you are using your technical tools, which is your primary analysis, combined with your secondary tool. No doubt price has crossed. What this thing is only telling you is there is a bullish momentum. Buyers are coming in. Buying pressure is present in this market, but that is not enough for you to make entry. So how do you do this? You need to be patient even after the cross and wait for price to pull back to your moving average. So you need this price that has been at this point to pull back to your moving average. And you can see how this happens. When it pulls back to your moving average, look at. Okay, price pull back. Price pull back to this moving average and gave you another signal, a bullish engulfing candle. So you can see that I can actually trade this without any indicator, because I will simply pick up my trend line and mark my zone, and I know it's a bullish trend. Here I can move to my 15-minute time frame. Okay, this is the pullback we were talking about. And on my 15-minute time frame, I knew what happens here. Look at. This is a bullish flag pattern. I will always have my trend line connected. Immediately I have this rejection, I will buy. Right? You can see those rejection, those pin bar. Or better still, I'll be patient enough. I'm using this indicator. I'll come to my 15-minute time frame, knowing that the indicator have crossed, and then wait for this pullback. Once this price pull back inside this indicator, you can see it, and it gave me, I will still need a price action. I won't trade this indicator blindly. And it gave me this signal, this candlestick formation. I'm seeing this rejection 1, 2, 3. I will make this particular entry, and you see how beautiful this price is. Here's another entry with an engulfing candle. This is how you can trade using your technical tools and your indicator, your technical analysis and your indicator. Depending solely, okay, let's bring up our and see how our window indicator add up to this our entry. Okay, now you can see that even in this case, this is of no advantage. Now let's add something like RSI. So now, looking at our RSI on our chart, just take a careful look at this. This is where we have our cross. When this cross happened, price was already here. Now this is the right way for you to trade using indicator window. Now look at what happened. Price is already here based on this indicator. But look at our RSI. Our RSI was at the level of 80. So if you are to trade based on a cross alone, it means price is at 80. It is enough that is showing us strength. But remember, if you are to mark your zone, here is a resistance. So resistance and RSI at 80 is not a good trading decision to make. So what do? You need to be patient. RSI is telling us that we have a strong buying pressure. Yes, but it's not enough to jump in. You will need more confirmation. What the RSI is telling us the strength. It is called relative strength index. It is not a tool for measuring overbought or oversold. So the fact that it tells you that there is a buying strength, buying pressure alone is not enough for you to jump in. If you have jumped in, this resistance would have sent you back. So how much do you have that you want to hold this trade for 1 hour, 2 hours, 3 hours, and 4 hours in a drawdown? So it is very important that we use this tool in a right way. But you can see that it still maintains the same strength all the way to the upside. So what do? You combine your price action. It's showing you strength. Okay, there is a bullish trend. Now, how do I come in with this? You work with your price action. You simply go to your lower time frame and you find your beautiful entry, just as we have shared earlier. So this thing is simple. You can see on your lower time frame. Here again, you can have your ascending triangle. Here is a chart pattern. Very simple. Now you are using your technical analysis. You can see your ascending triangle come into play. You see that? Price break out of it, your stop loss, and you are good to go. So this is how simple we can combine these technical tools, and it will bring a whole lot change to your trade. It will turn everything around. I believe you have learned something new. If you have gained value from this video, do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified whenever we publish our next video. See you guys in the subsequent video.